Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, February the 4th. The year's 2022. Let's talk trading. It's time for the weekly wrap up, and it is NFP Day. And I hope you all know by now these videos are for educational purposes only. Your results may differ from mine. So, taking a look at the monthly chart, you can see we're 105 pips above the monthly open, 80 below the high, and 114 above the monthly low. For the week, we are 157 pips above the weekly open. We are 81 below the weekly high and 161 above the weekly low. And as you can see, there's only a 4 pip difference here. There wasn't much of a low. All the open gaps for the week have filled. For the day, another interesting day here. Once again, we went into the opening range for the year. We were dancing around the open for the year just a few moments ago. In fact, I was scalp trading it. And we have the opening range for the week. We are 89 pips above it. So 22 pips above the yearly open at the moment. As you can see, the day's red. Everything else at the moment is green. Inside bar action, we broke out of that weekly inside bar from 2 weeks ago. That was a nice short trade for those of you trading inside bars. The day, we have a 110 pip range on the pound. It's been a while since we've had a range that high. And you can see we've got a couple of pairs over 200. But for NFP day, it's still not like it used to be. So you have to make your adjustments accordingly. Looking at the buy zone, let me switch this back to the hourly time frame here. You saw my crazy templates out there. You can see we had a trigger. We tested the open again here, but we triggered and moved out for a profit, crossed the daily open, and then out of the short zone. And the rest is history. NFP numbers shot the pound way down. I think they were lying, to be honest with you. I don't think those numbers that the government are putting out are the truth, but that's just my opinion. The green rats were rewarded here. A few entries at the 35.24 level proved to be profitable. Notice the smart rat was located at 35.17.4. So the smart rat here is that's only a difference of 13.1 pips between these two levels. So as you can see, the range of the pound is getting compressed. Okay, near the pivot, it called for a long. That was not a good call on the pivot trading plan. Price near S1 bias long. Well, it didn't work the first time, but here the second time, 46. We'd be up 3.3 pips at the moment. We took out today's pivot. We took out yesterday's pivot. Oh, I'm sorry, this is the weekly. Let's look at today. We took out today's pivot and even dropped below yesterday's. But we still have a missed pivot from 2 days ago and 3 days ago. In and out of the upper wick zone, in and out of the lower wick zone. Simple wick zone trades there. Now, looking at the range here for the week, 241 pips. You would hope that with the NFP day and FOMC last week, You would hope these would be over 200. So probably next week will be compressed. We'll just have to wait and see. 63 pip breakout to the north on the weekly. No breakout to the south. High minus close 81 at the moment for the rats. Close minus low 161 for the buy zone traders. Open minus low on the weekly was only 4, but the high minus the open for the long traders 238. So lots of pips to be had to the upside. And looking at some of the trading screens, simple horizontal lines, it paid off here. Short at 50. One of those NFP days, we should probably take it down to the 30 level so you could see it. So we had a short at 50 when NFP came out, broke that previous H1 low and just headed down. But you can see now we've more than recovered. That was a return bar. In fact, Walmart was playing for it. I don't know if he held on that long or not, but he was definitely playing for that return bar. And on the M30, the lowest high paid off a few times. M15, you can see price dipped and came back at the 35.19 level. M5, you can see the price action. So, and as you move up in time frames, you can see where price is really bouncing. You can see it here, but it's not as apparent as if you say move up to this level, because you can see everything below here pretty much was pushing up wicks. If you look at M30, once again, you see these wicks right here. So you'd be taking a trade to the north right here with a bullish M15 candle. In fact, I got in that trade, to be honest with you, took it for a few pips. And the this is the highest close, lowest close, which is almost the same as the highest open, lowest open, you know, within a point or two, usually, if not exact on the nose. But you can see here, we got into that zone and fell out. Indicator 2 went from bullish to bearish. And one of the things I just got done playing with, I really went old school. I ran a frequency distribution using close minus the moving average, and I looked at the absolute value, so whether or not it was above or below didn't matter. I'm looking at absolutes. And I was looking on the M5 time frame because it was seeming to give pretty good signals. And you can see it here. The close is usually within 2 pips of the moving average. In other words, when the candle closes, it's usually within 2 pips. Very rarely is it more than 5 pips. So what I was doing is every time price went away to the south side by over 2 or 3 pips, I was jumping in. Then when it came back to the moving average, I was scalping out. I mean, I have some, 0.5 trades and, 1.1 pip trades, and then finally I caught the Magilla. And when it got up past 5 pips, I watched it. I think it actually hit 7. And then right here, this candle turned black for a second and I was out. So that was just one thing. We've been talking about price this month. And so when you start to analyze price and see what it does, what it usually does, and you trade accordingly, and you stick with the plan and just do that one plan, it usually works out. One of the things that gets me in trouble is I sometimes start off trading one plan, then I switch to another plan, and it usually gets me in trouble. So you have to focus on one plan. In fact, I made a list, and I think I've got like 9 or 10 different trades. And they either fell into the reversal category, the breakout category, or the crossover category. And about the only other one would be a target type category or a bias trade. So you really need to focus and pick the one method, stick with it, let it play out. And one of the things I realized was, looking at the M30 candle, and we know that, we got top of the hour and bottom of the hour. Well, usually, okay, so here we have the top of the hour, then the bottom of the hour. So this candle is either going to come back and cover, or it's going to go the other way. I mean, it's going to come back and try to cover, or it's going to try and break out this way. So what did it do? It broke out this way. This candle, what's it going to do? It's going to try to break out, or it's going to try to cover. What's this candle going to do? It tried to cover, it broke out. So just watching these little things on price can give you kind of a clue which direction you want to trade or what you want to wait for. So for example, you say, well, price is in the rat zone. I want to go long. So here, you go with the candle color. And then here, what happens? It starts to reverse. It moved past the halfway point, started going back up. So you say, well, even though the candle's bearish, it didn't make a new low. So let's see. It tried to cover and failed. I'm seeing it moving away. So you could jump in, or you could wait for the open. So when the candle turns your color, it goes your way, breaks out, and then you get pips again. Same thing here. You say chances are price could cover, which it did, went down, didn't make a new low, came back the other way. So maybe here you trade it for the cover first, but you just have to figure out what you want to do. Pick one method, stick with it, and then you should be able to be profitable. So for example, here on M30, if I remember correctly, it's usually about 6 pips. It'll close around 6 pips about half the time. So I'll probably show you the frequency distribution. I didn't put it up on the chart today. I'll maybe show next week how that works, how I analyze price that way. But that's really old school. In fact, I remember I used to trade Google that way, where if it gets near the MA, you go long. If it went too far away from the MA, you go short. So I was pulling out one of my old school trades, and it was working pretty well here on the pound today. So, fellow traders, I hope you had a good NFP day. Hope you had a profitable week. Hope February's treating you well. Getting ready for the weekend. I wish you a fun and safe weekend. And when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.